Hi. Well, not unexpected. The action today, market up 147 points, but certainly disappointing to those of us that think that value lies far lower than here. Back when the market crashed the 24th of August, you can check back. I've been posting almost daily since then. But at that point, it seemed like a rally to between 16,750 and 17 was the most likely target for I would call it a correction in the downtrend. We got to 16,750. We're at 16,747 today, traded as high as 754. I still think there's a little more. I think that Yellen is not going to do anything tomorrow. I think the data continues uniformly bad. It was so bad this morning that gold and silver jumped and the dollar dropped, expecting that there would be no interest rate increase and that free money would continue. I'll have a post tomorrow talking about the scale of the ridiculousness that that is facing us right now. It's almost inconceivable that a group of academics, primarily from Princeton, as it turns out, have seized control of our national economy, and since we're the largest in the world, by default the global economy, with enthusiastic assistance from the Japanese central banks, and even the German central banks, who bitch and moan every time they're forced to contribute to the European Union fund, and yet continue to do so. Tomorrow's going to be an interesting day. I'm hoping that we see a nice rally, and I'm looking to get short there. I don't think that anything has been fixed. My channel's almost what is today, the 16th, so my channel is almost a month old now, and when I started, it was around, Dow was around 17,350. I thought that would be looked back on as a fantastic price to have gotten short at. We're only 600 points below it after being more than 2,000 points below it. That gives you some sense of the activity we've had over the last month. I'd also point this out that that while this may seem like a tempest in a teapot and not very much happening, I mean, up 150, we've been gradually creeping up ever since the 24th of August. The fact is that the market has fallen from 18.2 to 15.2, which is a 3,000 point move, and from 15.2 to 16.7, which is a 1,500 point move. So in the last month, we've moved 3,500 points. Now, granted, at 18,000, 3,500 may not seem that large, but if there hadn't been hope for more quantitative easing, and if we had allowed prices to settle where they should, then we could resume a healthy recovery. But since going back even past 08, even to 2000, when the tech bubble crashed, the central bank's response was to blow a bubble in real estate. And when the bubble in real estate crashed in 08, the next response was to blow a bubble in equities. I think that they are all in. They have dropped rates to zero. They've created enormous trillions of wealth out of thin air in an effort to maintain this illusion. So far, the illusion seems intact, but I believe that the foundation is irrevocably broken. The average American's earnings are back to 1989 levels, and we all know that prices are nowhere close to where they were in '89. So those who wonder where consumer spending is need only look at the facts. In any case, I'm glad to have been out of the market, at least not short, the last couple of days, and hopefully good fortune lies ahead. Good luck to you all. Take care.